Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. We begin the week of Monday, July 21st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We have got a news-heavy week. Very news-heavy, very big week of data. If you missed the market kickoff show, I would advise going there. I spent a lot of time talking about market rhythms and where we get caught in the noise and what might be the smartest thing for us to do as we trade intraday. Jumping into the E-mini S&P this morning, this looks a little bit like a topping formation. However, trend is generally up. We are sitting where inventory is pretty long. Whoopsie. Inventory is pretty long, and we are, well above that opening range, which gives us bullish pressure in general, saying pullbacks are buy zones. And so what we want to look for is the last time they accumulated inventory that they want to sell. All right. And so what we want to stare down is the potential bounce off of Friday's opening range regions. And so to me, looks like a nice long sits at 6,339. If it comes back to us, you'll notice last night I set up a trade, went to bed, but it went short right at the top of this zone, and I covered it as it came into the support ledge that we can see at around 63.35. Quick strike trade because the big range is this big one up here. I had a short at 63.50 something. I can't remember exactly what it was, but that's also been covered as it came down into the first floor. Traders are trying to accumulate in a ledge here that we can see. So we'll see what happens. A lot of news coming. Prepare for a day that has potential wick action. Why? Because we're caught in this big range. All right. Dips clearly are still going to be buy zones. We're trending up, but we could have ourselves some wicks. So watch your size today. Go slow. Opening range formations for the ES. High 6,339.25. Low 6,329.75. Well, what's the moral of that story? The moral of that story is don't try to go long. If you lose this edge at 63.29, value area high is just below that. So you might want to let it carve out that way and then have a reflexive bounce that returns to the zone where you could buy it. They could run a fair bit of stops here in terms of, general shenanigans. So watch out for that. Again, dips clearly buys. We can see that the IV for Monday, we're sitting right at the top of that range. Seriously, I would not be surprised to see this break and then collapse. Here's the big thing from my favorite volatility guy, which is Don Kaufman. He's probably the only guy I watch on YouTube and burst out laughing when he starts talking because he's just very funny to me, which is I'm a total nerd, and you might watch it and go, oh my gosh, what a geek. But love what he says about vol, and I'm inclined to believe that he is correct. So we'll be watching that. Expanded vol means we break the ranges and continue. So we'll see what happens there, right? IV for Monday, 6,356 on the upside. IV for Monday, 63.14 on the downside. Let's go to the NQ. Well, I sneeze. Excuse me. So here we are. Oh, why didn't I have Mondays in here? Oh, well. Here we are taking a look at the NQ. Same sort of thing. Value area high, a bit bigger, right? It's a bit wider. We are outside, just outside the value area and falling in. Still looks a little double toppy, but in the grand scheme of things, this is clearly a range. Could you take this short here if it comes in and tests your 23,300 area. Obviously, you could. Just don't keep adding to the short if it pops up over this edge of 23,328, because you're probably going to get your face ripped off. So just be careful. Best bet is to buy the dip. Let it fade, so it would be look below and fail, meaning it recovers to the top of the edge, and then we can move forward in our trade. Opening range, high 23,245.50, low 23,203.75. Why do I tell you these? If we have stayed above that opening range all night, and then we break it, the first thing that's likely is that they do a stop run or a liquidity grab, because that sounds more fancy pants. As it comes down into that range, expect reflexive action that recovers the range and then decide. My thought is they should come in and buy. But if they bounce and they cannot get back up in the opening range formation, it's going to fade. Now, this could end up being one or two trades that you jump into. You figure out it's wrong and then get out. Take paper cuts so that you can find the rhythm, not get yourself upended anyway, and then move forward. Okay? So we got the opening range. Implied vol for Tuesday, I have up at 23,369. So we know Mondays is inside of that zone. I mean, if you want to do something like get your charts a little messy and draw... Where's a good Fibonacci right now? Ugh. Price action's so ugly right now. If you draw Fibonacci here, Wednesday's vol hits it on the nose. So that might be what we are staring down. Again, I like the buy point coming in at the bottom of this big fat range to see if we can get buyers come in and move forward. Yes, you got to wait all day on the trade. Why, Emery, can I take it short? Because I don't know what the heck's going on with these guys over here. Are they buyers? Are they sellers? Do they have a lot of volume? Do they have a little volume? I don't know. But here's what I know. Everybody that came in here at this area that took control were buyers. And so I'm going to run with that back. Okay? Let's take a look at the YM. What are we staring down? Same sort of mess, right? Really big, clunky range of formation. Let's see what the opening edges look like here for us as traders. For the YM, opening range high, 44,562. Opening range low, 44,491. Here's the thing. I mean, if you look at the tight formation, we are trending up. Low, high. Higher low, higher high, higher low, higher high, higher low. And so it's trending up. The point of control sits at 44,644. Traders trying to get in front of that. So what's the storyboard? It's a big noisy patch. We moved from support to resistance to support, broke support, came back, recovered support, broke support, recovered support, broke support, recovered support. Noisy patch. Up here, same sort of thing. And right now we're in the middle of this slog in this space. So what is the trade? As you know, my thought is the YM is the one showing weakness, but the top of the range is 44,865. That's the shorting zone. Anywhere between that area and 44,820 is where the sellers came in and began to control flow. Now they're trying to recapture. So what is my thought? They're at least going to try and get to the top of the box. If you want to trade that, use old resistance, new support as your line in the sand. All right? So if you're going to be long right around 44,620, your stop might be 30, 40 points wide, right? Because this is a slog. It could easily come down into the volume weighted average price for the range, and that's 44,511. I'm going to wait for the edges to trade this monstrosity. It's a mosh pit in here. Let's take a look at micro Bitcoin. Oh my goodness, I forgot to do the levels for micro Bitcoin, but they are sitting on our Top Step platform. Well, let's have a gander at those. Apparently, something really big happened in Ethereum over the weekend. I don't know. But I do know that one of the biggest Bitcoin holders cashed in. I don't know. I think he made like 13 billion, some incredible number. And I think he's done playing. People giving him a hard time. But, if you were sitting in that spot, what's another 500? What's another 500 million, right? I mean, literally, what are you going to do with that? You already got 13 billion. It'd be a hard cry to try and spend all of that, particularly in one space. Okay, so what are the real numbers for micro Bitcoin? I will adjust these after the fact and put them up for you. I just totally bagged on this, have no idea why. All right, so for Monday, our implied volatility move is on the upside 119,500, right? That's for Monday. And you can see that we jammed up inside of that number, right? And then rejected it. Wouldn't you know, opening range low of Friday gives us a double topping formation. That's really pretty interesting. Today's opening range, pretty big. We are inside of it right now, but trying to hold. That's going to be key, right? Overall, this is a really messy chart, right? Opening range high, 118,330. Opening range low, 116,625. Again, I'm looking for the fill of the gap. I have no idea whether that comes, but this is so messy that if I'm looking for a trade to hang on to for it to run in one direction or another, I'm going to look at this big fat range and I'm going to try and get it as close to support here because that's where they're running. 116,582. My stop gets particularly small. I have an opening range formation here. Looks like some kind of half-day event. That puts us at the bottom of this area at 115,120, but also, right, there's the range within a range. And that really seems to be marking the floor for here, right? 115,900. So that's what we're looking at. This number, let me get it for you so that it doesn't cause confusion. 121,625. 625. All right, 10625. And then Fridays, 122,065. Oh, geez, yeah, that's right. All right, and on the downside, sorry, folks, hopefully you're watching me at, 1.5x or something. Low end of the downside. 113,625. Oh my. 113,625. And then Fridays, that's a pretty big volatility expansion right there. 113,185. Yeah. That's pretty good. So remember, the reason we have these here is because people have sold puts and sold calls thinking they're going to keep it in the range and collect the premium from selling, right? That's the reason they do it. So we watch to see if they're going to be caught in some sort of squeeze that makes them move in the other direction. Taking a look at oil. Oil is in the same kind of trouble, or trouble for us, right? It's very rangy, very, very big sideways motion. We had buyers come in way down here at this $65 marker, 65.38. It's been a sloggy mess there. Inverted head and shoulders moving up to the top of, wouldn't you know it, top of an opening range candle. If you don't look at these, you probably should. They're going to suit you in more ways than one. So, What are we staring down in terms of volatility? Volatility is pretty compressed in here. And, well, I sure hope I have those numbers right. Let me double check. Man. Thursday. Yeah. Yeah. Very compressed. Very, very compressed. And at the top of the range. So we've seen a lot of motion here, very, very sideways. Look at the opening range formation. We've broken both sides of it. High, $67.57. Low, $67.24. It's really telling us that we've got resistance at $67.75 or so, and support looks like the point of control at $66.65. Do we have a contract roll here? What is this pricing? $65.97. Ah, that's it. We have a contract roll here. Hence the troubles. Yes, $65.97. Same sort of formation, bottom of the area going to give us the region to be buying if we want to be outside of the noise, right? The noisy action, $66.45, upside and below $65.58. That's where all the noise is sitting for us as traders today, okay? That one's bad. I don't want to trade that one. Let's take a look at gold. Let's make sure I'm on the right contract. What a mess today. Pretty disgusting. 33.94. Yes, holy smokes. Take a look at this vol. It's breaking out again. Apparently, we've got some stuff going on in the currency markets. I got to dig around in there a little bit more. Noisy price action just gave way to a breakaway that is now at the top of this space. So here's the thought. Here are traders in the opening range formation from... Is that opening range? No. That is not the opening range. Let's move this. We've got an opening range formation here, well below us. And the last time we had structure that looked like this is, well, never. If we go back to this contract here, we've got 3,396 as the next target. This is very chunky. We can see that inventory accumulation all the way from 6,400 maybe, all the way down to 6,380. So I like that 6,380 as frontline support during this massive move up. This is a monster squeeze. Could you chase it? Absolutely. Just be careful, right? Have a tight risk and be careful. Opening range in gold today, high 33, am I sitting in the right space? 3,356, low 3,351, and this is a news-based candlestick, and it is absolutely running very big expansion. Notice when gold starts moving, folks, it really takes a tidal wave with it. So you could chase it up, but watch the implied vol move. This is for Thursday, and we're already here, 3,396. Fridays is 3,406. Those would be regions where I would look to potentially cover this trade, but I'm not going to trade this sort of expansion without some sort of retracement into prior opening range formations, right? Like this one we saw from way over here. We can see, tested it, failed it, recovered. That's the trade from that opening range. Okay, gold's on the move, but in general, we are going to see increased volatility in the charts. We really are. We are going to see increased volatility in the charts. SPY, that looks weird. Yeah, SPY coming into Friday's opening range. It's just left the top of its opening range. This looks like a topping formation to me. I would not be on. I would not be disinclined to take a short there. I would not. Definitely. Sure to fill the gap, or I suspect it will fill the gap from rotation, but we got to watch what's going on with inventories. Noise. Let's see. High of the opening range, $627.98. Low of the opening range, $627.67. We've broken through that into Fridays. We are stair-stepping down into the last areas of inventory accumulation, which look like 628 to me, right? So if you're taking a short right around that 628, you want to go ahead and cover. It is very important in every chart that you look at that you register the close of the prior day. That is incredibly important. Traders look at these closes much more than they look at the opens. So watch those closing lines to see where target action appears for your trades. Okay, that's it for me. My apologies for just being a little bit scatterbrained today. I have been trying to get my brain in gear, and it is, I feel like I'm pulling a dog on a leash to the vet. They don't want to go. All right, so that's it for me. I will see you guys later. Remember, Midday Moneyball on the Benzinga Pro platform. Be looking forward to seeing everybody there. We're going to be really able to look at quite a few things. We're going to really focus on price formations. Those are the things that are going to win for us. Price formations, and where is it that inventory sits that we can collect and then distribute for a profit. Okay, take care, everybody. See you soon.